You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by MIAX, one of the fastest, most efficient trading platforms in the world. MIAX is proud to bring you Spikes Volatility products. Spikes options and futures are traded on the Spikes Volatility Index, SPIKE, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction, all for ultra-low exchange fees. It's volatility reimagined. Learn more about Spikes at miaxoptions.com/spikes. Options and futures involve risk and are not suitable for all investors. The statements made are provided for informational purposes only and should not be relied on for financial or legal advice. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means it is time once again to view some volatility. Yes, it is time for Volatility Views, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-scintillating network upon which so many of you are just feasting. You're just gorging. You're gluttonous for the content. Hey, we don't judge. I see the bandwidth bills. I know how much you guys are sucking down. It's okay. It's a good problem to have at the end of the day. Keep gorging, you guys, of course, on the on-demand side. If you like what you hear, we ask if you like it, keep rating and reviewing. It does help new folks come in to add to the feast every week out there. And, of course, if you want to go above and beyond, join us in the live. Of course, get access to the exclusive shows that you on-demand cats don't get, like great Pro Q&A. You want to talk about Vol? We had a deep conversation with Scott Nations, the creator of VolQ this week, in our Pro Q&A. Also author of one or two or about half a dozen great financial tomes. We got a new one coming out right now called The Anxious Investor. So all kinds of stuff. We talked about that this week, as well as, of course, our Options Oddities show every Friday. What crazy shenanigans did we get up to this week? What crazy trades did we put on? What unusual activity was unfolding before our very eyes? What weird insider trading, perhaps, did we spot before the regulators' Activision? Well, you got to tune into Options Oddities to find out. And the best way, the only way to get that, of course, theoptionsinsider.com/secret club. That'll get you access to the exclusive pro podcast feed that gets you everything we've done, everything we ever will do, bumps you to the front of the line for all the questions, all the other cool stuff, the giveaways, you name it. It's part of the secret club. All kinds of cool stuff in the works for that as well. So get in there to enjoy the fun. And let's see who's joining us to enjoy the Vol fun today. First, let's go out to a sleepy town on the far eastern shores of these here United States. Little area called Maine, where the clam pirates are still rampaging. They're back, listeners. And we are joined once again by the rockingest of lobsters, Mr. Andrew GIOVINAZZI from OptionPit.com. Mr. G, welcome back to the show, sir.
It's good to be here. It is a sunny, non-stormy day on the shores.
I don't believe you. We all know from listening to this show, it is always dark and stormy. That's just the way it is.
It is. I'm actually, as tide's coming in as I'm looking. So the Lamb Pirates, they will not be back.
They will not be. Oh, so you finally did away with them once and for all?
Well, the Tide does away with them every day.
You didn't bust out the shotgun?
They leave.
Bust out the old Maine greeting, a.k.a. the shotgun? That's how you deal with guests.
Actually, they have an airboat, so they're pretty fast.
Oh, well, you got to get maybe a long rifle then. We'll have to upgrade your arsenal to see in between episodes. And I do believe also joining us from the far east as well, at least the east of the U.S., somewhere around in New Jersey, I do believe. If the technology gods are smiling upon him, Mr. Tom JARCK, the Vice President of Proprietary Product Development over there at MIAX. Mr. Tom, welcome back to the show, sir.
Thank you, Mark. Hey, Andrew, how are you?
There he is.
Looking forward to a good...
Nice
you
to
can hear me okay?
Nice to hear your voice finally, sir. Welcome back.
I don't use the Skype a lot. I had to get off the computer and use the phone. So, but no, glad to be back on the show. It's been a while. Obviously, a lot going on the last, at least the last quarter, from what I've seen.
Yeah,
so,
a lot to unpack.
Looking forward to.
We got a lot to unpack.
Yep, looking forward to a good show.
So let's get to it. Let's get to the volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Vol Review, the portion of the show where we do just that. We review the week that was and indeed still is. From a vol trading and trending and analysis and unusual activity, all sorts of fun perspectives. This is another one of those days where the market's kind of struggling to figure out what it wants to be today. It seemed like we were going to head into the show mixed, and now it seems like most of the major indices have slid into the red. The Dow ever so slightly. It's pretty much barely unched. The S&P off about 0.15%, and the NASDAQ closing in on 1% to the dark side, about 0.9%. So the NASDAQ, as it is wont to do these days, has firmly embraced a direction. The rest of the market still kind of trying to figure out what it wants to be today. But that means all this, a little bit of red. I mean, vol, you might think vol might firm up, but we are heading into a weekend. It's not a ton of red, so we're not really seeing vol get much firmer today. We're still seeing, coming into showtime, we had spikes still shy of the 23 level, about 22.85. That puts it down a little over 1.5 points, about 1.65 points from where it was on last week's show. VIX cash, when we kicked off the show, about 22.25. That puts it down about exactly 2 points from where we were this time last week. So VIX and spikes shy of 25. That means, unfortunately, listeners, our frequent returning guest star these days, Mr. Loggins, will not be able to join us today. He is above 25 only. That's when we're in the danger zone, listener. But who knows? The way these markets are, we could be there by the end of the show. So maybe we'll get a special guest appearance by Mr. Loggins a little bit later in the show. VVIX coming into showtime right around 110, about 109.5. That actually puts it up on the week, about 1.5 points. Isn't exactly surprising. We're kind of at, somewhat stable levels for VVIX right now, given how much tumult we are seeing out there in the markets. And let's go out, since we're talking VVIX, let's also talk its counterpart, the Viking, a.k.a. V-Spikes. That's at about a 133 when we kicked off the show. It's actually down about 8 points from this time last show. So a lot to unpack. Mr. Tom, you mentioned at the top of the show, it's been quite a while since we've chatted with you, since well before the world was plunged into this whole Ukrainian morass, as well as, I do believe maybe even since the start of the year when everything really kicked off with a volatility tumult. So we have a lot to catch up with you. So before we even get to this week, sir, catch us up. What's been going through your trading screens and what's been catching your eye as the markets kicked off this year? And we saw a lot of vol start creeping in. Then, of course, over the last month with the additional vol from Ukraine and the Fed, sir. Then we'll get to this week.
Wow, that's a lot to answer in this one show. We can talk for hours, but yeah. So what have I been up to? I'll keep it on the shorter term here. Last week I was down in Florida. I was at an FIA conference, which is the Futures Industry Association. It was amazing how many people were there internationally.
Oh, you were down there, huh? I skipped it this year. It's the first time really since the start of the pandemic. Obviously, there were known the last couple of years. It's the first time I've missed an actual in-person one in quite some time. I heard it was a pretty good turnout. So that was the case?
Yeah, it was really, really big turnout. It was my first time going ever to the, to this conference. And, it was pretty interesting. There was, I think they said there was about 1,000 people in attendance. There was, the weather was not the greatest, but still, there was a lot of people there. Other than spikes being the main focus, of course. No, I'm just kidding. There was a lot of digital crypto, like almost an inflow. For people that said they were there in the past, they had never seen such a, presence of the digital and crypto world. So it was pretty interesting. He even had A-Rod was one of the guests that came on. He spoke with the FTX CEO, Sam Bankman-Fried. And, even those two were, even A-Rod was chatting about digital assets and things like that. So it was a pretty good turnout, good, really good, a lot of meetings, really good vibe overall in the industry. So it's, other than what's going on, as you mentioned, in the Ukraine, and, we never want to, we like volatility in the markets. We like movement. We like price discovery. We like volumes, but we don't like it when it's at the, in terms of wars and people dying. It's not ever good. But anyway, yeah. So let me know if you want me to go on a few other things. I can, or we can switch it over to Andrew. But one thing I wanted to mention on the MIAX front is we had a recent hire. We hired Caitlin Meyer. She's joining the exchange group in a marketing and sales role. She I don't know if you know the name, but she was formerly with the CBOE and prior to that CME. So we're looking forward to working with Caitlin. She'll be a great addition to the team. Working with Matt and myself a lot, and Andy Nybo and the rest of the whole crew. So that's been a new development. But yeah, so the one thing too is that you mentioned V spikes. It's out there. It's being quoted. It's I don't know if your user screens should be able to pick it up. It's put out over Opera, so they should, if they're looking at options products, they should be able to pick it up. But I'm gonna pause there, let you guys jump in, and we can talk vol. We can talk whatever you want.
All right, we'll get into Look at the rock lobster, and then we'll come back, give you a chance to collect your thoughts. But you're right. Yes, a lot to unpack there. V-Spikes, you're right. It is starting to get out there and propagate a little bit more. I think it's just reflexively now, Tom. I just go to Simon's site, T3 Index. I just grab it from there because I know it's there. And I usually pull up a bunch of other stuff while I'm there. I'll pull up some of Simon's got a bunch of things I always check anyway. So I usually swing by there anyways. You can always go there, listeners, as well. T3index.com, Simon's site. He is the creator, after all, so he does have it out there. So if you're having a hard time finding V-Spikes for whatever reason, that's the place I go. You get the bit skew, you get all the kind of stuff he's putting out there. Mr. Rock Lobster, while you're cleaning your shotgun in between invasions of the clam pirates, what's been catching your eye from a vol perspective this week, sir?
Well, I would have to say today is the first day in at least 30 days that we've had a somewhat normal contango in VIX in the future curve. Like according to our option pit theoretical value for vol, it is we have a little bit of we have a pretty normal curve, basically. Although VIX is 22 and we're at the upper end of the range, we do have a very normal curve. So crazy. I remember, I guess what was in the summer 2020, when we kept having these like crazy vol curves with even when VIX was relatively high. Remember those future premiums just got massive. This isn't massive. This is kind of normal-ish, I would say.
I have no idea what you're talking about. We saw massive futures premiums. I was busy, sir.
You were busy. You're polishing your nails or something.
Yes,
like
that's what I do here in the studio.
And this is the first time I think in a month. I'm going to go longer than a month, probably 5 weeks. So, in general, this curve shape is bad for the vol products. So that means you've got the volatility in the front term in the like SPX and all the major indices. That vol's starting to come down. You're starting to have a more normal curve. Vol goes up in the back. Forward vol gets higher. All of those things, curve shape changes, and it basically makes it. It puts a lot of pressure on the vol products. We won't speak about VXX anymore. That is the vol product that shall not be named. I decided. And just terrible for the industry, I think. But I will Of course, I just gave my opinion. So
where does it really quickly? If we're not going to speak about it, we'll just speak about it now really quickly. Then, where does it rank for you in terms of like this versus maybe the neutering of like SVXY? Which one is more appalling to you?
I think this one is
really
more appalling.
This is worse. Wow. I still hold the torch for SVXY myself.
Right. I mean, that one did just destroy basically everybody's vol positions.
They asked
Long Vega.
They asked no one. They did it overnight. Let's just do it. Yeah. OCC ran with it. Sure, change the entire structure of the product overnight with no problem. Why not?
Nobody here's another thing is, don't the people in the OCC understand how options work? You take the underlying movement down by 50%. The ball's going to go to zero.
Why would options people who hold long premium, why would they care about such things?
No, it's okay. So this one is just that now there's no direction in the XX anymore. So because there's it's the tethering is all messed up. So, vol futures are down, VXX is up, or it's up $10 for no reason. Yeah, hey, what the heck, because there's a squeeze. So actually, you know what it is? It's because I always thought VXX was reliably crappy, that they would at least do what they're supposed to do. And now they can't even be, now it's just crappy. It's not even reliably crappy. So I'm just going to say the disappointment is more. However, the dollar effect was much worse for me on the SVXY getting cut in half. Because I thought, oh, wow, this is going to be a no-brainer watching the vol pop back up when this thing comes back to life. And then, wait a minute. Nope. We're changing our mind. So all those calls just went away. Anyway, so yes, this one was not financially painful in any way, shape, or form. There we go.
If you own some weekly puts in VXX, it could have been painful.
Yeah, I mean, if you did that, I was weird because for one, I did just because we were VXX was kind of flatter, and I don't own many, and I might have probably just closed. I did close some prior to, so I never had. I just for whatever reason on part of the cycle I just didn't have any on, and I don't like owning really any VXX puts when the curve is it's kind of backward. They go to die, so I've learned to avoid it at that point. So I say right now, normally in the cycle, I would looking at as many vol puts as you can possibly find right now. This is a perfect part of the cycle with just kind of a light hedge and just lean short and see, just try to ride the curve down a little bit. But it is VXX is until they get their act squared away. And then the next part is then I hear they might be reissuing a normal SVXY and a normal UVXY, like a 2X1X.
Did they announce that this week?
There was speculation that they were going to announce that product. I heard that Monday, although I did not see who the issuer was.
Are they going to
certainly buzzing across FinTwit?
Oh, so it's not an official SVX. It's not like the same issuers are going to just have a neutered version and then a new one, the regular back. Someone else is trying to ape that. Okay.
Basically, they're trying to create a new style product, but similar to the old ones.
I'll need to do some digging.
Crazy, huh?
I need to do some digging. Well, we heard that about the new XIV too back in October, and we still haven't seen hide nor hair of that.
Right.
So
yeah,
I'll believe it.
Talking about.
I'll believe it when I see it. I'm just looking here for some news on this new SVXY.
Is that what Andrew's referring to?
No, he's referring to a new SVXY apparently, which I had not heard.
A new SVXY, a one-time product, and a similar to the UVXY old 2X product.
Okay.
So that was the stuff. I was just on FinTwit. I'm just, I hate regurgitating crap I see on there. But
were you lurking on Zero Hedge again? Were you reading that font of information for the Russian intelligence agencies?
I have to say, you can almost write some of the Zero Hedge stuff, just depending on what day of the week it is and what's going on. So
that is
quite entertaining.
That is definitely the weirdest site on the planet. They have half articles. Some of them are actually kind of good about the vol surface, and then they go deep into crazy histrionics about the Clintons or whatever that it is given day. It gets pretty nutty pretty quick, but I digress. Let's go. Mr. Tom, before we get into some of the products right now, I know you're champing at the bit to talk about what the heck you're seeing right now, because there is a heck of a lot of vol to analyze, even if it is coming off a little bit today. So what's been catching your eye this week, sir?
This morning especially, waking up to the kind of the two news events I saw that I thought were kind of interesting. Obviously, the Citigroup rate hike expectations, increased massively, and I think that's a pretty significant. There's definitely been a lot of talk about that, and that's obviously we're in this inflationary environment where longer dated rates are coming have been very bid up. From the vol perspective, I just been noticing. It seems like the whole vol complex has come down quite a bit with the, kind of with the rebound in markets here in the last few weeks. But I thought, but what's really interesting, obviously, to me, is the rate vol versus everything else. Rate vols have really, picked up quite a bit and stayed higher. They came off with everything else the last couple of weeks, but in the last few days, they've really upticked again. Yeah, with that being said, I think there's, I look at Simon's bit vol and the ETH, his Ethereum vol. Those things have really come off a lot, which is really surprising to me as well, because that universe is, can move pretty drastically when it wants to. The other news event I saw that was pretty interesting to me was, we talk about volatility. I haven't been on the show in a while, but you look at the hard commodities. Obviously everybody's talking about nickel and things like that, but I saw that the LME raised their guarantee fund from $1 billion to $2 billion. So it's a pretty massive increase in their guarantee fund. So I'm not an expert on that market, but I will. That I just thought it was a highlight that to me that was showing a little bit of more stress in the system there. So and just on the rate part of it, I think it's interesting too, because and I haven't checked with my my structured product friends on the bank side, but when rates typically go higher, as we're seeing with inflation, you typically see a lot more interest in some of the structured note world. I know in the past we always talk about structured notes being an alternative for yield products, et cetera, et cetera. But when the rates do go higher, it makes it more attractive for the some of the long strategies where you can think of a basic example of a bond plus call kind of strategy. So if you want, I'll go into it real quickly. But so what happens there is the bank would sell an investor a note for $100, but that the bond underlying that note is only worth let's say $90. With that $10 extra, the bank would go out to the marketplace and they would buy call options. They'd spend that premium, less their fee, of course. So you have these bond plus call type products that we could see reemerge. So I haven't really been chatting with some of the folks in that world, but that generally keeps a decent bid to some of the longer dated volatility as well. So it's just a couple of things I wanted to mention there. But yeah, these all these vol indices are really, really interesting to watch right now. Everything's all over. And as far as on that ETF on VXX, yeah, I think Andrew said the word perfectly. It's disappointing. I hate to see any kind of any scars against our or any strikes against our business at all. But I think they've been handling it well by not. There's been no follow up as far as they haven't made any more announcements since the first announcement that they're halting the creations. But maybe an update here and there would be a little bit nice. But no, it's the bank can do that. Those are notes on the bank's balance sheet, and they have the right to make those calls. I see today it's at a 20% premium in the markets right now.
Yeah, it's pretty much about the highest. It's around the highest it's been since that note was launched. That note has been around since January of 2018, so it lived through Volmageddon, and it didn't get as crazy from a premium perspective as it is now. So that should give you some frame of reference, listeners, for how abnormal things are. And you're right. Again, maybe we'll get to VXX a little bit later, but it would be nice. Maybe an update or two would be nice. It would help to maybe derail some of this madness that is going on out there. But it's not an all VXX show all the time. By the way, Mr. Rocklobster, I did look while Tom was talking, and all I could find was really that announcement, same announcement where they announced the new XIVs, where they also announced that kind of levered 2X version out there, which I believe is what you're referring to. So that was back in October of last year, but we haven't heard anything, I don't think, new since then. At least I haven't heard anything. So I think, like a lot of people, we're all still waiting and seeing to see when these products launch, because they will undoubtedly, at the very least, probably give a lift to some of the vol futures, which is where we're heading now. Let's get on into the land of the volatility surface, and you were mentioning it earlier, Mr. Rock Lobster. We're finally seeing some normalcy return to the VIX futures out there, and they've come down, I think, substantially is the key word out there. Coming into the start of the show, we had that April future down over 7 points, 7.1 points from this time last week, and the May future was closing in on 5 points. You don't usually see that level of annihilation in the VIX futures list. That shows just how rich that front portion of the curve had become with all that backwardation. It had a lot of room to go there, and we pretty much squeezed all of it out over the course of this past week. Mr. Rocklouse, is there anything catching your eye out there from the aggressive squeezing of the near portion of the vol surface, sir? Yeah, that's that magical blinking button in front of you again, sir.
Oh my gosh. I thought I was going to go a whole show where I was just going to hang all the technical issues on Tom. I was going to get away with it.
You're going to wave your finger at Tom and say, nah, 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 boo-doo.
Yeah, nah, nah, boo, boo. You're the one with all the tech issues. And all I had to do was press a button. Still that troublesome button. Anyway, we kind of called the vol being lower this week. I remember you and I, it was one of those things where, so much like badness was sort of priced in, and thankfully it has not come to pass so far. So, and I think that was the big issue. Like, okay, oil squeeze. Now all of a sudden, then of course across the tape, and you watch all the oil stocks exploded today because the U.S. is going to get more into the production and exporting of said battle fossil fuels. So there's been a little bit of a about face, I think, in Washington, D.C., which is good. So I think you got that. Anyway, kind of like more normalcy there. And as far as like the VIX futures go, I mean, they're. I think the vol, like, if I'm looking at short-term vol, it's in the teens in the weeklies in the SPX, which I think is a little low. So, but it's low because nobody wants to buy it anymore. So the liquidity providers are probably more than happy to let stuff drift lower so they can scoop it all up if they want to. But again, normal curve, much lower vol in the front. And that's the recipe for lower vol. So I also think, when the Fed came out with their sort of more aggressive posture, stocks have been straight up since then, which seems counterintuitive, but like, hey, we're not going to let this inflation get out of hand. Like, I don't know if they've gone shopping lately. I looked at a grocery bill there. I mean, I don't know. I think our grocery bills are 50% from last year. So somehow that noise, I don't think Powell buys his own, bread, milk, and eggs anymore. So maybe his maid told him offensive.
Jeeves, the manservant, has not showed him the receipts in a while, sir.
Exactly. He's like, oh, my budget's gone up. I think that the Fed finally getting, I think they're a year too late to be quite honest with you. But that's just my dumb opinion. But the market, listen, all I know is they said it, the market went straight up. And also the fact that, it looks like there is negotiations going on. So, okay, you have this inflation thing. You have some maybe more oil production. These are all, I would say, economically positive things. And doing something about inflation and try to soak up and stop printing money for crying out loud, like knuckleheads. So I think the market likes that news in general. Politicians probably don't, but I think but stocks have. So and they got sold pretty hard. So and there are a lot of bargains out there still. I would not say like the largest tech names are necessarily a bargain, but there's a lot of other stocks that are. So, and we'll see how that all goes. So, overall, hopefully it will be better, especially for the poor citizens of Ukraine that keep getting bombed and are miserable. At least for right now, the market has gotten back to, and we traded in the 20 handle for VIX today for a brief moment. So that, those are all signs that we're coming to accept what we're seeing right now. So for better or worse, that's what we have. And although, underlying volatility, I still think is pretty high. It's not nothing. I mean, we're having a lot of 2% days still in the Qs. 1.5% days in the SPX. We've at least had that range today, intraday or very close to it. So stocks are still moving. I think the short-term vol is relatively inexpensive. I'm not going to buy a bunch of it on a Friday, but we'll see how that looks on a Monday.
We shall see. And speaking of the futures, Mr. Tom, if anything's catching your eye out there in the vol surface, have at it, sir. And then also, I know when you're not busy talking to me, you spend a lot of time over there talking about Spikes futures. So if you have any updates on those as well, have at it, sir.
Okay, yeah, sure. Thank you. As far as the term structure of the futures, whether it be VIX or Spikes, I think Andrew touched on it earlier that the levels are definitely inflated, but the curve is getting to look somewhat normal. The contangos is quite steep, but the overall levels are pretty high. So it kind of makes it interesting for some of these vol ETPs that should vols reset lower, and at this current steepness, it could be a pretty interesting move in these things. But as far as Spikes volumes and so on the futures side, just I'll go back to MGEX overall. So Spikes futures trade on MGEX, and you can access them through the CME Globex platform. But being that on MGEX also has a lot of the wheat products and some of the other soft commodities that they had record volumes in February. Spikes futures have been coming off a bit in the last few months, but we've had some good progress, and I would say overall the liquidity and the market quality is still quite. It's great. The market, our liquidity providers are putting out good markets, and they've been in there consistently. So that's been that's what we're looking for. So love to see even you, Mark, in your big portfolio. You can I think they can handle your size as well.
They can take down my. I don't know. Once I bring that thunder, there's no going back, Tom. So
there you go.
Be ready. Be ready before the whale moves in. That's all I'm saying.
But but it's been it's going smooth. It's we're speaking to a lot of folks. Talked to a lot of people down at FIA. There's a lot of interest in the product. It's just getting it's just a slow moving process to get people to migrate into it.
Well, let's see how much migration we got going on. We were talking about the Spikes options on our last show. We had that big 4-way that went up, and we were wondering for a while there when they're going to close it. There obviously was biased towards the upside. Well, they finally did during our show a couple of weeks ago. So we broke that down for you last week. We're waiting for that new positioning to come back in the land of Spikes options, but it was good to see. People got while the getting was good. If you have an upside trade, the market is shooting up and vol is shooting up, they probably would behoove you, unless you're 50 Cent and you're waiting for that absolute perfect moment. It probably would behoove you to do something with that, and that's exactly what they did. Let's go out now to the land of VIX options, see what they're doing. And we're starting to see the numbers pick up a little bit today. I was looking kind of light earlier, and that's kind of what you would expect in kind of a gentle, drifting, mixed day, with the markets deciding to usually hang out a little bit lower, even though now they're starting to trend towards the green. So we shall see if this volume creep continues. But as of right now, about 333,000 contracts going up on the day. The ADV has continued to erode. It's down to about 570,000 now. It's down about 9,000 from this time last week. Let's break down the top 10. What are the size positions right now in VIX options? Cost you 131,000 contracts to break into the top 10. That's not nothing. It's not enormous either. We've seen it, over $1.50 easily in the past. So not quite there. That gets you to the April 23 puts. By the way, 60-40 right now, puts over calls, down from 70-30 last week. So one more call sneaking in there in the top 10 this week. Number 9, we got the June 70s, our old favorites, 132,000 of those. Number 8, $1.36 of the June 16 puts. Number 7, 137,000 of the April 35 calls. So, dare I say it, a mildly relevant call, certainly compared to the 70s and 75s. It seems comparatively reasonable. And then number 6, 137,000 of the April 22 puts. Number 5, the even more reasonable April 30s, 144,000 of those. Can we find something in the 20s? That's probably a bridge too far, listeners, but we'll see. Number 4, 150,000 of the April 20 puts. Number 3, $1.55 of the June 18 puts. Number 2, $1.94 of the June 19 puts, and still dominating the tape, listeners. That other part of that 1x5 there, the OX 75s. Not only have they not closed any of these out, they're still open 250,000 of these freaking things still open of the October 75s. That's just, I think the technical term is crazy town out there today. Let's see how crazy it is out there today. There's 333,000 contracts on the tape, like we said. Looks like most of that, almost a third, 93,000 of that is coming in the April 30s. So back to that strike we were just talking about. They finally looks like they're maybe buying more. So some folks thinking maybe we're not done with the 30 handle out there in vol. Number two, a distant number two today, only 22,000 of the May 22 puts. So it really is all about the April 30s out there today. Maybe I'll have to dig a little bit later to see if I could exactly what's going up with those bad boys. And number three, we got 20,000 of the April 24 puts. Number four, 19,000 of the June 130. So you know what? Forget what I just said about the 75s as being outlandish or optimistic. We got almost 20,000 of the June 130s going up today. I need to go find what the other leg of that is as well. My goodness, I don't see another leg against that. I think that's just straight up June 130s going up for 15 cents, almost 20,000 times. My goodness, and rounding out the top five today, about 14,000 of the April 25 calls. So man, we got something for everybody here today. We've got little puts in May. We've got somewhat relevant calls in April, and we got redonkulous calls in June. For just about everybody. Yesterday, not a heck of a lot going on. 389,000 contracts on the day. The big paper, I should say. 25,000 of the April 22 puts and 23,000 of the May 25s. We're getting up against this. Let's keep rolling here to Wednesday. Wednesday, a little bit more paper. 495,000. And the big trade was 40,000 of the April 40s, followed by 40,000 as well of the June 65s, and 40,000 as well of the Nove 65. So maybe rolling some of that June to Nove. We have seen that before recently. It was a pretty close spread, so it was pretty cheap to do it back when they did it last week. Maybe that's why they're doing it again. Also, similar paper of the April 40s. I don't think that's related, but you never know. We also see the April 30s going up 38,000 times and 35,000 of the May 20 puts on Wednesday. Tuesday, 647,000. So far, the most active day of the week. The big trade on Tuesday, 88,000 of the June 70s. So back to those fun strikes, listeners. 88,000 as well of the June 60s. Looks like a bit of a vertical going up there. Number three, we got 30,000 of the April 25 calls. Number four, 22,000 of the April 75s. And rounding out the top five on Tuesday, the April 22 puts 21,000 of those. So two, shall we say, relevant strikes and three fun ones. And then Monday, 484,000 contracts on the tape. The big one, once again, the April 75s. People cannot get enough of these freaking strikes. 30,000 of those things going up on Monday, followed by 23,000 of the May 20 puts, 22,500 of the April 110 calls. I love these strikes. Number four, we have 20,000 of the May 35s. And rounding out the top five on Monday, 20,000, pretty much exactly, of the April 22 puts. Mr. Rock Lobster, what caught your eye out here this week? And inquiring minds want to know how many of the June 130s and the April 110s did you trade this week, sir?
A lot of the April. You know what? Did we? I was just looking at that volume list. Did you see any more of the? Did they buy any more of those Ox? They did not. Yeah. Okay.
No, they're still at a quarter of a million.
That was open.
Those are a quarter of a million, and that's pretty much been staying there for a little bit. Yeah.
Yeah, and they haven't done anything. So they're sitting on those. I thought the biggest volume change that was a change was we actually are seeing put buyers again this week. So
we're seeing put buyers. We're seeing put buyers and the 130 call buyers.
And the 130 calls. Well, you know that's kind of the beauty of VIX. You know.
I was going to say, that's why I love this. I love this product because it can do that in the same week, in the same breath. It can do those trades.
I know. Well, the funny thing is, like, the 130 calls are $1, and the 20 puts are $1. And VIX is 22, which is, you know, like for our listeners, you know, you have to digest that. That's not normal. You know, the call that's $100 out of the money is $1, and the put that is $2 out of the money is $1. You know, so there's that funk with VIX. So I would just have listeners, you know, understand kind of how this product works. It has some let's just call it nuance. Can we use that word? Is that Is that
it's a very charitable description of it, sir. Nuanced.
Yes, it's a nuanced product. It's a nuanced product. So yes, I did, and I actually, it's one of those things where I'm what's his name, Overby. You sit down and you wait until the thought goes away.
Lay down until the urge goes away. Yes.
Yes. I love that one because I'm looking at okay, the April 2018 puts are only a dime. Oh, not anymore. They just ticked up. And I was looking at the 19 puts are only a dime, and now they're 20-cent bid. I'm like, I just missed the opportunity
That's
of a life.
Doubler in your face right there, sir. Right there.
Easy. So
free money.
They are definitely, and here's the funny thing, right? The 18 put, 700, volume is only 700. So there's not even, nobody in their right mind is thinking VIX is going to 18, which is still, 70%, what is it? 70% of all vol is 18 and less. But right now, no, it's not there. So anyway, 18 is the bottom of zone 3, actually. So that's more like at the 50% level, kind of the half and half, right around there. So anyway, but there's like nobody cares. Nobody cares. So it's still, people care a little bit, just a little bit, but nothing like normally, when you're trading at a 22, usually there's just huge appetite for that stuff, but not right now.
Why would you care about an 18 put when you can get all the 130s you want for 15 cents? I mean, what are you doing with it? So you got pretty much equidistant there. You got a dime for the 18 put in April or 15 cents for the 130s in June. Which way are you going, Rock Lobster? Clearly, someone went the other way 19,000 times today. So you got 19,000 130s. And what'd you say, 700 April 18 puts going on? Nobody cares about the April 18 puts, sir. It's all about the 130s. That's where the action is these days. Again, this is just a product that kind of speaks for itself sometimes, and this is one of those days. I was trying to dig to see if I could see any other legs of some of those spreads going up here today. It looks like the June 130s did go up straight up there. Just straight up June 130s for 15 cents. Splitting the uprights. They were a dime at 20. So what are your thoughts on those? Do you like those those June 130s? What would you want to do with them for 15 cents? Hit us up. Let us know. Let's keep on rolling. We touched on this briefly earlier in the show, so I don't want to spend too much time on this. It's clearly a, shall we say, to be charitable, broken product right now. But it's good old VXX. It was at about 25 and a quarter when we kicked off the show. That was down 1.25 points. It has ticked up a little bit since then, closing in on 25 and a half. That puts it down still about a point. But again, the movements in this thing are, to put it charitably, nonsense right now. It's pretty much a closed-end fund at this point. It moves around based on the whims of the market and nothing to do with what's going on in the VIX futures, which is ostensibly what it's supposed to track. But until we get more updates from Barclays, this is pretty much what we're going to get. That ADV is down precipitously as well, reflecting this turmoil. It's down to 340,000. It's down 45,000 contracts in this time last week. So people are voting with their wallets. They don't want to touch an absurd product right now. And so we shall see. If Barclays keeps this up, that ADV is going to continue to erode precipitously. Let's do a quick top 5 out here. Number 5, 36,000 of the April 20 puts. Number 4, 40,700. Easy for me to say. 40,700 of the April expiring on the 1st of the weekly 16 half puts. Number 3, 41,000 of the March expiring today 19 half puts. So those going the way of the dodo. Those don't seem like they have much of a chance. Again, some of the victims, Mr. Rothhouse, we were talking about of this madness in Barclays right now. Number 2, 48, almost 49,000 of the April 18 puts. And rounding out the top 10 in VXX right now, about 50,000 of the April 30 calls. It's still 9-1 overall puts over calls in the top 10, if you are wondering. The only call is the number 1 position, about 50,000 of the April 30s. That's kind of interesting. In terms of what's lighting it up out there today, again, let's just look really quickly. Not a heck of a lot. That's 5,000 of the March 26 calls and 3,400 of the March 26 halves. It's all expiring today paper, pretty much going up today, and it's pretty light, all things considered out there. Only 162,000 contracts on the tape today, listeners. So things are looking pretty light. I'm sorry, let's today 112,000 contracts on the tape today. Let's get on out to its sister product now, because we have already spoken about VXX at length today. This is UVXY. This is, the remnants of the great neutering from back in the day. The SVXYs and UVXYs of the world. UVXY was at about 14.25 when we kicked off the show. It's still around there, down slightly. That puts it down nearly 2 points, about 1.75 points from this time last show. So UVXY is still pretty much performing as it is supposed to do in these markets. So the ADV down a little bit. It's down to 238,000, down 7,000 contracts from this time last week. And so far today, we're seeing about actually some decent paper, about 213,000 contracts on the tape out there. Let's do a quick top 5 out there as well. By the way, the overall top 10, 70-30 puts over calls. Top 5, we got about 10,000 of the March 14 puts. When I say March, it's all going out today, listeners. Followed by about 10,000 as well, the March 14 half puts. Number 3, 10,600 of the March 15 calls, our only call in the top 5. Number 2, 12, almost 13,000 of the March 16 puts. And the number 1 position out there in UVXY right now, about 13,300 of the June 20 puts. So interesting. Very meaty puts in UVXY right now. In terms of what's lighting it up out there today, almost 20,000 of the March 14 halves and about 13,000 of the April expiring in the weeklies. The first 15 calls are the big trades out there. Mr. Rocklop, so we talked a lot about UVXX. If you have more to add, have at it. Than anything catching your eye this week in UVXY, sir?
Yeah, a little bit of put action, but it's also getting down to that like little tiny number again, right? I mean, when do they usually split it again?
It's usually around 10. It's usually around 10, right?
Yeah, I mean, this is one of those things where, I don't really teach the students premium selling, but it's kind of one of those things where, selling some call spread and selling some puts, like little straddly action, because it's kind of dead down here when it's $14. I mean, it moves. It is decaying at around 24 to about 30 cents a week. So there's a little action in it. And it could, and another thing is like, an 18 an 18 VIX, and that product would get smacked around pretty good. It'd be down like $3 or something. So there is potential for it to move still. But like as an upside product, you're like, it can move. But again, the lower it gets, and you're kind of waiting for the split to happen again. So it's getting kind of down to that place. Once it gets close to $11 or $10, they're getting ready to split it again. So, but yeah, if we do have a real vol crush and we get back into the teens, UVXY will get nailed. So there was some fun trade in there. I traded some strangles last week, but I closed them. So there was some good action in there, buying some strangles and making some money. And now we just see what happens if we actually get the real VIX crash or not. So anyway, and we'll see. We'll see. And I guess there's, it's another thing if you think about it, like products like the spikes and VIX, you've got your future, you got your term. I mean, they're solid. They're not going to get wonky on you. And I think that's, if I'm doing the market, I'm saying, hey, we got our futures and we got our spikes, and no weird stuff happens because we're not going to change stuff. So, which is looking pretty good. Like all I'm looking at is VIX now, I have to say, and spikes. So, because I know I'm not going to have that weird lateral arabesque for an underlying. It's going to mess things up. So, those ETP and ETN industries, they should watch themselves. They keep screwing with people. They're gonna lose a lot of
lateral arabesque. Wow.
Yes.
Getting out there, Mr. Rocklop. Look at you digging into the old thesaurus out there as we keep on rolling. You know who else digs into the old thesaurus whenever you guys reach out to us? It's you folks and your questions. So let's get to a little bit of the old volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options. or facebook.com/theoptionsinsider.
All right, everybody, let's get to some questions now. Really quick, hyperconvexity. I like that. Hyperconvexity. I like that handle. He just wanted to know, is anyone listening to Vol Views Live? I can never get Mixler to work properly. Wondering if there's another way. He says he's been listening for a while, trying to listen through for a while. Yeah, hyperconvexity. You and everyone else who asks this question all the time, you can get it on podcast whenever you want on every platform under the sun. If you want to join us live, you got to head on over to theoptionsinsider.com/secret club. That has all the info for you can join this show, everything else we do throughout the week. That's also going to get you all the great pro Q&As and options oddities coming up a little bit later today. So that gets you a whole bunch of extra content there as well. So that's how you have to get the live. You head on over to theoptionsinsider.com/secret club. That'll give you all the info to access the live, as well as, of course, get access to the pro podcast feed. So good luck to you there, Hyper Convexity. Look forward to seeing you in the chat out there soon. And in terms of, speaking of the pro Q&As, everyone's all fired up about Scott Nation's appearance on the pro Q&A this week. Everyone's saying they ordered his book on CD. I didn't know CD was still a thing, but apparently Luigi likes himself some CD still. I didn't know you can get an audiobook on CD, but yes, his new book coming out, The Anxious Investor. Good timing on that. People are also excited. He did tease for our audience the upcoming launch of VolQ options. They're finally going to be listed. The futures have been listed on CME for a while and not really done a heck of a lot. So you think sometime in the next 3 weeks to a month, we will finally see a VolQ. So those of you who want to get maybe a different flavor of volatility, some NASDAQ vol, that one will be interesting for you. Luigi's asking, he's looking forward to those options. What do you guys think? What kind of strategies will... Well, we talked about that with Scott, actually. I think some people asked that exact question. What strategies? Are there any differing strategies for NASDAQ vol versus S&P vol? And, for most vol indexes, they're going to be pretty biased to the upside, right? So I think a lot of that standard stuff still applies. People are going to be buying calls. They're going to be doing 1x2s so things get juicy, those types of things. But he did point out an interesting nugget, which I think is worth listening to. And listeners, if you haven't checked out the Pro Q&A, you should check it out. He mentioned that there is an interesting disassociation between NASDAQ vol and S&P vol, particularly during earnings season. And he liked actually butterfly calendars. It was a pretty esoteric way to approach it. So I thought that was pretty cool. And that might be worthy of further discussion with him about how to approach that type of thing. So yeah, interesting. Usually it's going to trade, look at it, 80% overlap with the S&P, right? So a lot of your standard strategies are going to apply. But outside of those moments, there's certainly times around earnings season where things get a little bit disassociated. That may be interesting. I don't know, Andrew or Tom, whoever has thoughts on this. Have you thought about NASDAQ vol versus S&P vol and what strategies may resonate well in one versus the other? And what are your thoughts about calendars with NASDAQ vol during earnings in particular?
Oh my dude, that's like 5 separate classes. Right,
and you got like 2 minutes, so have at it, sir.
Yeah. So I would say I've liked so a trade that I have on, or just unwinding if I would do it in a halfway decent fashion, was owning some Q calendars with some protected puts with where the vol is right now. That worked out pretty well. So you can find different ways to buy the gamma and the Qs. As far as calendars into earnings, I don't like holding stuff through earnings, but they can work with some stocks prior to. And right now there's a lot of good calendar trading because you have the back month vol is relatively, the front month, the pre-earnings vol is relatively high next to the back month. So there is a lot of good calendar opportunities right now in a lot of tech names. You do have that front month vol is pretty high, which personally I think is a great time for a calendar in tech. So hopefully I answer those things fast enough, and that's what I'm doing.
All right. Yeah, because we got to keep on rolling here. We got more questions that are very in-depth. Maybe we'll get to more of them next week. Keep those questions coming. Don't worry. We'll get to you out here on the show. By the way, we have a great question of the week. It's going away in 2 hours right now, listeners. What is your cutoff? What is your threshold for cheap options trading? Is it $15, $10, $5, or no limits? You're a savage. You don't care what the price of the underlying is. You will trade options on it. Right now, no limit savages are winning with 40% of the vote, followed by 28% saying below $15. That seems strangely high to me. 24% saying below $5, and 8%, only 8% saying what I thought was going to be the clear winner, below $10. So there you go. Have at it at options. You got 2 hours left. Podcast folks, you're probably out of luck, but live folks, you still have time to get in there, make your voices heard. Meanwhile, it's time for all of us to get difficult, to get dangerous. It is time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, listeners, welcome to the portion of the show where we attempt to wrestle with the volatility gods and see what they have in store for us. At the end of the show, we have VIX shy of the 22 handle, about 21.85 or so, spikes at 22.60 or so. So nice little disassociation between spikes and VIX. And looks like this time last week it was myself, the meatball, and then Ben and Scott over there. and Scott Maydell and Ben Eifert, and they were both at a 25, so they were the two lowest on the panel last week. I was at 27-23, so I was feeling a little bit more ball creeping back in. The Meatball said he was quote-unquote fading his book at 33-33. The moral of the story is no joy, no winners from any of us. Looks like we had some interesting listener submissions. Options Queen not looking bad out there. Munster, Mensa not looking bad either. So we'll have to have our producers go through these and see who is our winner chicken dinner for this week, if any. Let's go around the horn. Tom, you were not on last week, so you get pride of place. You get to go first. What are you feeling for this time next week, sir?
I'm going to go with spikes. My pure guess is a lower spikes level, as this trend might continue a little bit. I'd say, let me see here. I'm thinking, let's go with, 21.
21 even for Mr. Tom. Now, Mr. I almost said Mr. Meatball. I apologize. Mr. Rock Lobster, same question for you, sir. You were not on last week, so you get to go as well. What are you feeling for this time next week?
You had Ben Eifert on last week. He's a really funny guy on Twitter.
Yeah, we had him on. We had him and Scott Maydell from the Q9 Advisors, I believe.
Yes. Oh, but he didn't win. He didn't win the vol thing. He was at him shit.
He was at a 25. He was at 25. No victory for him for a DJ D-Vol. He's
gone down a peg in my book. He didn't win the crystal ball.
DJ D-Vol. No win for him.
No win for him. So I'm going. I'm doing 19. So I'm doing 1989 VIX, which would be 2089 spikes.
So you said 2089 in spikes, and what was it? 19 VIX.
1989 VIX.
Oh, 19, a good year. Yeah. Very good stuff. All right, 1989 VIX, 2089. All right, everyone's feeling the fade, which means I get to be contrarian a little bit this week because I'm feeling a little bit more upside in vol. Again, not quite as aggressive as perhaps I was last week, which was already coming down from the week before. I was even higher last week. I like a little bit lower than my level for last week. I think something's going to conspire to firm us up a little bit again out there. I'm going to say 24.7. No. It's 24.69 out there. All right, so that's our market for this week. At the upside again, 24.69. Mr. Rock Lobster is at the low end, 19.89, and Tom in the somewhat lower middle at an even 21. All right, that music means we got to get on out of here for this episode, listeners. But hey, if you need more in your ear holes, just come back in a little less than an hour. The Rock Lobster and I will break down the week that was and indeed still is from an unusual activity perspective. What crazy trades we put on this week? You got to wait to find out. Options Oddities, theoptionsinsider.com/secret club to get over there and join all the fun. Mr. Rock Lobster, I know you have to go prepare for all things oddities, sir. So if folks want to reach out to you and find out more, where should they go? What should they do?
Again, just call 888-TRADE-01. Ask for Ted. And again, as we all know, just say Andrew is the most handsome man in option radio, and you get 10% off all Option Pit products just because you listen to this show.
Why do you want our listeners to lie to Ted? I don't understand. Why are you doing this? You know what the password is now. The discount code, the sexiest man in options, and it's the real Mark, not the meatball out there. You say the truth to Ted, and you get your discount over there at optionpit.com. Anything else, listeners, is a clear and bald-faced lie. We'll be back with the Rock Lobster in about 55 minutes. We'll see if he's cleared his head up since then. And Mr. Tom, if folks are intrigued, I see you guys have added a lot of cool stuff to the MIAXoptions.com/spikes page. So you got anything cool you want to plug there? Any teases you want to leave our audience with? Now is the time, sir. The floor is yours.
Yeah, I would say if you go to MIAXoptions.com overall and you look under products, you can see our 3 different categories of unique proprietary products. Within spikes, we also have information about the V-Spikes index in there. And one thing I wanted to note, too, is that we have at the very bottom of the website, you click on that YouTube icon. We do have a YouTube channel. We've been putting a little content on there. Simon and I did a video on V-Spikes recently, and there's some other just, spikes related and, the other products as well, like bricks and tax product webinars. And so there's, we're starting to put more and more content on there.
There you go.
MIAXoptions.com.
There you go. MIAXoptions.com is the place to go to learn more. Like I said, we have to get on out of here. So if you're on the on-demand side, that does conclude our broadcast week. We want to thank all of you out there for joining us this week, not just for this show, but for everything we have out there, the Option Block, TWIFO, crypto, all of that fun stuff, Options Bootcamp, Options Playbook Radio, and a whole bunch more. We'll be back again next week with all our usual rash of shows, including the Advisors Option. We'll be back to that with the Oracle of New Hampshire joining us to break down some earnings. Well, that should be fun, as well as all the way through to another episode next Friday of Volatility Views. Stay safe out there, everybody.
Volatility Views is brought to you by MIAX, one of the fastest, most efficient trading platforms in the world. MIAX is proud to bring you Spikes Volatility products. Spikes options and futures are traded on the Spikes Volatility Index, SPIKE, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction, all for ultra-low exchange fees. It's Volatility reimagined. Learn more about Spikes at miaxoptions.com/spikes. Options and futures involve risk and are not suitable for all investors. The statements made are provided for informational purposes only and should not be relied on for financial or legal advice. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.